Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, starting from the benchmark index moves to sectoral action and all the stocks that are buzzing in trade. Remember, it's a down day for the market. In fact, the Nifty has just touched a low of 19,300 and it's now slipping towards the lowest point of the day as we inch closer to the day's end as well. But why is this really happening? What are the cause of concerns and where do the markets go from here on? Is this a worrying point for you, and what should be the strategy that you as stock market investors must follow? All of these questions will get answered as we get into a discussion with our expert of the day. Quickly, first let me tell you the picture right now on the screen. It's definitely a bloodbath on D Street today. 1.2% downtick for the Nifty. It's now 242 points down in trade, 19,300 on the screen. The Nifty Bank is down by over a percent, 43,205 being seen on this index as well. When we talk about the sectors, all the sectors of the Nifty are down in the red. Sharp fall being seen on several of those as well. It's the PSU banking index that's down by 3.5% today. Media stocks down by almost 5% in trade. You can also see over a 3% dip coming in on the metals pack as well. The broader market seeing a very sharp downtick. Look at the Midcap 100 index. This index is lost 2.5% in trade and it's now trading at the 2-month lows level as well. 38,900. These are the kind of levels and those breaching as well. Almost a 1,000 point dip for the Nifty Midcap 100 index. So don't lose sight of this. The small caps also taking a beating. 3.3% downtick for this one. IT, oil and gas, private banks, autos, consumer durables. There is nowhere to go as far as a safe haven is concerned in the markets today. It's definitely a market where you would want to just stay away and not take any action. On the Nifty, let's talk about stocks then. Well, it's just two stocks of the Nifty 50 stocks that are holding up into the green. Mahindra & Mahindra and Bajaj Finance, 0.4% of an uptick for these two stocks. Rest of all of the stocks on the Nifty, 48 of them are down in the red, pulled down majorly by IT heavyweights like TCS, LTI, Mindtree. You also have Adani Enterprises that's down 3.5%. Hindalco is down in trade. Adani Ports is down in trade. Tata Steel, JSW is down in trade. A lot of Tata Group stocks. Tata Motors is down. Tata Steel is down. TCS is down. All of them crashing in trade. So be it the IT majors, be it the metal counters, be it the Adani Group stocks, all of them are facing the pinch. Where do you still see bright spots in this kind of a market as well? Definitely, there are few spaces that are looking positive despite this kind of a sharp downtick. On the Nifty 500, you do see Credit Access Grameen. The stock is up over 8% in trade today despite this overall carnage that you're seeing on the D Street. BSE hitting records as well, 52-week high levels, 8% higher in trade. Ipca Laboratories up by almost 7% in trade. Bombay Burma, that's another stock, 1.5% higher in trade. And Ipca Laboratories, after that positive inspection by US FDA, is the top gainer on the F&O index as well. But let's quickly get our guest on the show and let's try and understand what's really happening in the markets. Mr. Kranti Batini joins in. He's the Director Research at Wealth Mill Securities. Welcome, sir, and thank you so much for taking the time out. Explain to all our viewers the reasons behind this continuous fall. Now 260 points down for the Nifty. We've now even breached below the 19,300 mark, 19,284. Where does this fall stop?
Yes, Akshay, it's a very deep, sharp cut in the market at this point of time. Nifty reached its key support range of 19,300. So right now we can see a panic selling that's taking place. The first and foremost thing is the rising global tensions and the tensions that's getting escalated at West Asia, and also the comments, the commentary, and the statements came from the countries like Saudi Arabia and also the UAE have created some kind of negative, changed the global negative sentiment, and also rising bond yields in US also have been creating pressure on the market. We can see all the global markets across the globe. The European markets opened at a deep red at this point of time. So it's creating extra pressure on Indian markets. Coming to the domestic markets, of course, even though Indian macros are in line, they're quite encouraging, but the global factors have been spoiling the party mood in India. Uh, right now, the earnings season just kicked off. We have not seen any kind of positive blockbuster kind of results in the earnings season. In fact, earnings season has not enthused the market till now at this point of time. So we need to wait and watch further the companies that are going to declare the results, how they are going to pan out. But till now, there are no, it's not enthused the market. So put together ahead of the holiday, we can see some kind of complete profit booking and longs have been unwinding and shorts have been getting executed in the market at this point of time. Overall, is it a key cause of concern for the investors? Is this kind of sharp declines we are going to see further? The issue here is right now, every time I used to tell Indian market is a good encouraging market to buy on every dip. But this time, the escalation and the geopolitical events that are shaping up in a global arena, it is definitely a cause of concern. We need to see how the crude oil prices are going to pan out in the next couple of weeks, and also the tension that's getting escalated in the Middle East and West Asia is the crucial things one need to observe.
Sure.
Probably, given the kind of the long-term
Sure.
growth prospects of Indian market is concerned at this point of time, Sakshi, if an investor is coming fresh, there is no need to jump and buy at this point of time. Probably in a staggered manner, he can start at this decline, probably 19,200 levels, 250 range kind of thing. One can start in a staggered manner. Probably he can start infusing a 10% of the capital at this point of time. Uh, Probably he can start buying in this range also with the 10% of the capital if he have a investable surplus of 100 rupees at this point of time.
Okay. Let's again revisit the numbers. 270 points now down on the Nifty, 19,271. The Sensex is trading around 830 points lower in trade at 64,565 odd levels as well. So sharp fall clearly being seen in the markets, heavy sell-off coming on the markets as well, especially when we talk about the broader markets. I wanted to take your view. It's the Nifty Midcap 100 index that's now trading at a 2-month low period. It's in fact one of the biggest falls that we've seen on an intraday level for the Nifty Midcap index in this month entirely. The Midcap index has also slipped below 39,000 level for the first time since August of 31st as well. Several of the stocks are down in trade. In fact, about 88 stocks of the 100 stocks are down in this index itself. So, sharp carnage being seen. First up, your thought on the mid-cap space. We have seen this space outperform the market so far, but do you think now is the time when perhaps overvaluation, overheated kind of concerns that we had been listening to are now coming into fore?
Sakshi, the kind of sharp decline what we witnessing in mid cap at this point of time, we can see some kind of froth is getting adjusted in mid cap because there is a sharp rallies witnessed in mid and small cap stocks, and in some pockets where we have witnessed a complete astronomical valuations also in mid and small cap space. So some kind of froth is getting flushed out of the system at this point of time in mid cap, and mid cap always treated as a high beta in nature. So they tend to respond in a negative way, in a high beta way,
Sure,
whenever these kind of geopolitical issues that surfaces in the
sure.
markets. So,
Okay.
one need to have a stock specific action at this point of time rather than looking at the stocks on a complete in a basket way at this point of time, Sakshi.
Sure, sure. So, Mr. Badini, let's talk about some of the stocks like on Midcap Index itself, staying with the space. Laurus Labs is one of the stocks that has fallen about 11% on the back of weak Q2 earnings as well. Then there is PVR Inox. Despite most of the positive commentary from the analysts, the shares have been trading in the red zone, after announcing the quarterly results over here, 4% lower in trade. From the metals pack, Hindustan Copper is down almost 6 odd percent. Paytm is down in trade as well from the new age basket. How are you looking at some of these stocks that are seeing sharp declines in the mid cap space, sir?
Yes, actually, there is no need of hurry to go and catch these falling knives at this point of time. But names like Paytm, any further dips that comes in these stocks, like name like Paytm and all, is a good opportunity for the investors who are investing on a longer term basis. Whereas,
Okay.
as you mentioned, the names like Laurus Lab and all, given the kind of disappointing earnings they posted, and also no clarity on the earnings going ahead. So there is a kind of um, a gap in terms of their commentary and also the results. I tend to avoid the stock at this point of time, Sakshi.
Okay, understood that. Let's further discuss some of the pockets as well. Where would you really advise investors to buy this dip? Is there any pocket where you believe that, this dip should be used to buy into?
Yeah, names like autos, which is a complete domestic story at this point of time. Any sharp decline, in fact, the global um, metal prices have been declining, which will help the auto stocks. The copper has been a yearly low right now, so which will help the auto stocks. So, auto can be perceived as a good investment opportunity at the medium to long term with respect to the declines are concerned, and also engineering and capital goods also actually one can do the cherry picking, and also we can see some kind of softness of the prices with respect to defense stocks. Of course, these stocks are not the valuations are little bit stretched. If at all any further dip that comes in the defense stocks also is a very good opportunity for the investors who want to accumulate the chips at a decent valuations at this point of time, Sakshi.
Okay. We're just about 21 days away from Diwali now, sir. Every time, of course, investors are hoping for some Diwali pop in the markets. What does it, right ahead of the markets, we're seeing a sharp decline. How would you advise investors to really look at the markets in the run up to Diwali? Do you see any, point of recovery coming in after this sharp decline?
Sakshi, definitely rally can be expected because of the domestic macros of Indian economy is concerned. But the main cause of worry is not with respect to the domestic, but it's more about the global factors that is escalating tensions in Middle East, how the things are going to pan out, how these geopolitical issues are going to lead the market in the coming days, and also that geopolitical events influence on the crude. These are the factors that are going to drive the market in the next couple of weeks, actually. We need to have a strong stability in Middle East at this point of time. The West Asia issue is concerned. But it's not an easy solution which will come overnight. Okay, but one need to closely monitor the events that are taking place in the West Asia.
All right. Well, fair enough, Mr. Batini. Thank you so much for taking the time out and discussing all these insights about
Thank
the
you, sir.
markets.
Always pleasure.
Clearly, a down day for the markets, but be very careful. Don't catch the falling knife. Just like how Mr. Batini has pointed out, be very, very selective of the stocks over here. And over this, at this point in time, one should just carefully wait and watch to find out how the macros, both globally and domestically, shape up going forward from here before taking any aggressive actions at this point in time. However, as most of the experts do say that you should continue to carry on with your SIPs, your monthly SIPs in your mutual funds or in several stocks that you have discussed with your financial experts and invested in, because these are the times that you can continue to build on, average out and create value for yourselves and for your portfolio as well. Right now, 1.4% downtick, the Nifty slipping even further, 19,266 approaching on the index right now. We'll continue to watch out for how the markets really trade right ahead of this holiday of Dussehra. Here's wishing all of you a very, very happy Dussehra. Season's greetings to all of your families as well. But the markets continue as they always do. So don't get too worried or panicked about this kind of a fall. This has been a phenomena, and I'm sure that this will definitely see some good light going forward as well. With that, we'll wrap up this special edition, but do stay tuned onto Business Today TV to catch all the updates from the world of business and stock markets.
It's that time of the year for the residents of National Capital Delhi and NCR when we have to hold our breath because it is not the fog but the smog that has started to come in. The